back, everyone, to episode 131 of the Fundraising News Podcast. Today is Wednesday, August 27th. You've got myself, Matt Marino, a customer success manager here at Dakota. And then Pete, why don't you come in, introduce yourself as well? But I think the folks know you by now.
I think we've been pretty well acquainted.
Yes. Yeah, Peter Harris joined us again for another episode. Pumped to have you here. Just one episode this week, of course, with Labor Day weekend coming up. We'll get through everything today, and then we'll be back next week. 1 or 2 episodes, TBD there. But regardless, one this week. Let's jump right in, starting with some job and role changes that we've seen across the industry over the past couple days. First one, Dylan Gravenstein transitioned to Morgan Stanley as a financial advisor associate in NYC. That transition happened on August 22nd, so very, very recently. He served as an associate at Goldman Sachs Asset Management Client Solutions Group. And now currently, with this new role at Morgan Stanley, he focuses on delivering comprehensive financial advisory services to their existing institutional and intermediary high net worth clientele. One other to note here, Mario Valverde transitioned to Cerity Partners as a generalist in institutional business development on August 22nd of this year. He served as a director of institutional sales at BlackRock, going from BlackRock to Cerity, two very well-renowned firms there. Based out in LA, he leverages his extensive background in institutional sales to strengthen Cerity Partners' client relationships and business development initiatives, which, of course, Cerity, one of the larger RIA aggregators and consolidators out there. So best of luck to you, Mario, in that new endeavor. And the third one here, Peter Riley transitioned to Trajan Wealth as a fiduciary advisor based out in Houston after serving as a co-founder and COO of R-Cubed Global Capital. In his role, he provides tailored financial guidance, combining entrepreneurial leadership experience with a client-first advisory approach, which is probably the approach across the whole firm over at Trajan Wealth. So best of luck to Peter, Mario, Dylan on these new opportunities in the industry. And I think, as we could see there, RIAs, financial advisors, broker-dealers, just the intermediary space as a whole, definitely where we see a lot of turnover across the industry. But what's also going on in that space from an M&A standpoint? Excuse me there.
Well, I mean, Matt, definitely a lot going on. And by the way, Peter Riley, I mean, Peter, you have a terrific name. Personally, I might be a little biased, but there's definitely a lot going on. I think people also want that interpersonal connection that they have with a financial advisor and RIA, just to really have someone that you know is really attentive to your needs, your wants and needs. And so right now, there's a lot going on in the RIA M&A space. So a trio of JP Morgan veterans registered L1 Global Wealth as an independent RIA in Coconut Grove, Florida. The firm, which offers family wealth management services on a both discretionary and non-discretionary basis, is owned by Jesus Vamparosa, Diego Mas, and Ignacio Martinez. So the financial products distribution firm Simplicity Group Holdings acquired Lewis Center, Ohio-based RIA Aptus Wealth. The firm was incubated and launched out of Aptus Marketing, a brokerage general agency now operating as Simplicity Columbus. Aptus Wealth manages $95.5 million in client assets, all of which are discretionary. Going forward, Aptus Wealth will operate as Simplicity Wealth Advisors, and its owner, Joshua Pick, will become a Simplicity partner. Simplicity Group is backed by Skynight Capital and Dragoneer Investment Group. Legal and financial terms of the deal have not been disclosed yet. Joe Duran, founder of United Capital and former Goldman Sachs partner, launched Rise Growth Partners to back mid-sized RIAs with capital strategy and tech support. I guess he's trying to help them rise. Funded with $250 million from Charles Bank, Rise has taken minority stakes in Bleakley Financial Group, now One Point BFG, and its AUM is $12 billion, and Grimes and Company with a $5.6 billion AUM. Duran argues that scale alone isn't the prize. He's focused on $5 to $15 billion range for RIAs that can grow faster and offer stronger client experiences than mega consolidators, making them attractive to candidates for minority investment over outright sale. I really just think this ties into like people want something that can deliver strong client experiences and making people feel like they're being attended to.
Absolutely. And I feel like when that happens, typically, allocations, commitments can come in. So we're going to jump right into some recent investments, not across RIAs and the intermediary investors that are out there. Of course, they don't disclose that. Wish it wasn't the case, but we're going to go to large institutions that do disclose their allocations and commitments, starting with Lacera. Speaking of LA, Newport Beach, Dakota Cocktail event coming up in a few weeks. Going to be around the Future Proof Conference. I'll be there. If anyone listening in is there, hit me up. Would love to grab a coffee or lunch. But first one here with Lacera, right around $82 billion in assets under management. They work with a few consultants, so I'll just break them down. They've got Makita. They use Stepstone specifically for real estate and private equity. And then they do use Alborn for the hedge fund side of things. So a couple commitments here to note, right around $1.05 billion in new commitments. First one, a $400 million commitment to a dedicated hedge fund account with III Capital Management. You then have a $200 million worth of commitments across a few private equity funds. We've got Sterling Investment Partners Fund 5 and then NovaCap International Technologies Fund 7. Shout out to both of them. And then $150 million committed to CBRE Asia Value Partners Fund 7, CBRE in our backyard here in Philly. So huge shout out to that team. And then a $100 million commitment to Whitman Peterson Fund 5 in the U.S. real estate space. So, I mean, even with CBRE there, you've got this other U.S. real estate strategy and fund. It looks like real estate certainly is, generating some traction as of recent. So shout out to all those individual firms and teams to get those over the goal line. Next plan, University of Houston System Endowment, $1.1 billion in assets under management, working with NEPC as a consultant based out of, no surprise here, Houston. They disclosed making a $29 million commitment to Acadian non-U.S. small cap equity and a $12.5 million allocation to the Evanston Multi-Alpha Fund. They also expanded the relationship with Costa Ventures, making a $12 million allocation across Fund 9, Opportunity Fund 3, and Seed Fund G in June. That is a mouthful. And a follow-on to its earlier $10 million commitment to Costa in 2022. So Costa, couple commitments there from Houston System Endowment, and then a few others that we noted right there as well from that endowment. Last one here, Contra Costa County ERA, $12 billion in assets under management, based out of San Fran, working with Veris and Stepstone from a consulting standpoint. They made over $240 million in new commitments, comprising of a $100 million ticket to DFA variable term treasury and TIPS strategy, $50 million to Arkline Capital Partners,
Nice.
$40 million to the Arlington Capital Partners Fund 7, $30 million to Cloud Capital Fund 2, and a $20 million top up to its earlier $60 million commitment to Cross Lake Real Estate Fund 4. So a handful of commitments there. Activity, even though we're in August, is still going on. Of course, we pull a lot of these from the board meetings, so there might be a little bit of a delay there, but nonetheless, some activity certainly that went on throughout the summer. Peter, why don't you jump right into some searches that we've tracked as of recent? Looks like one there.
Yeah, indubitably. So with respect to searches, the Oklahoma Police Pension Retirement System, with assets of over $3 billion, in the metro area is Oklahoma City. I've never been at Oklahoma City. I want to. I have a buddy that lives there. Yeah. So trying to get out there for sure.
Definitely. Gotta go for a Thunder game.
Oh, definitely. And
shout out NBA champions.
Exactly. Thank you for that. But you've never been to Oklahoma?
No, and I've got no interest.
Okay. Well, I appreciate the candor and transparency. But
yes.
So its general consultant is Asset Consulting Group. Its private credit consultant is Asset Consulting Group. And so what they decided, the Oklahoma Police Pension Retirement System has cut its non-U.S. core equity manager search down to 4 finalists. Things are getting intense. Acadian, Ernest Partners, 91, and Orbis. A manager vote is anticipated at the August board meeting. And before we go on, I just wanted to give a special shout out to the police that sacrifice their lives for us. Thank you. And so, Matt, I'm just going to talk about what does this all mean, because we're throwing a lot at everyone. So here are Dakota's strategic takeaways for GPs and LPs. So that's something that we've been mentioning a lot, that is number one, mid-size RIAs are attracting capital partners, not just consolidators. The Rise Growth Partners model underscores that firms in the 5 to 15 billion assets under management mix can secure growth capital via minority investments instead of just selling outright, which offers them new flexibility to scale without sacrificing independence, which I think is a big thing, because a lot of these firms, they want to obviously scale and get the capital that's needed for that. They also want to retain a certain amount of autonomy. So it kind of really fulfills that happy medium. So what are institutional investors are doing? So number two, institutional investors are leaning into private markets diversification. I mean, it just feels like a time where private markets are like a candy shop, and we're all little kids. And so from Lacera's $1 billion across hedge, PE, and real estate to Contra Costa's mix of buyout, venture, and real estate allocations, LPs are actively spreading commitments across strategies to balance return targets and liquidity needs. And I think that's a really good way to guard against any risks and any potential volatility that could potentially arise. And so number three, tech and healthcare focused fundraising remains robust. Large rounds like General Atlantic's $115 million into Starion, Partners Group's $104 million into Restored, and Maj Invest's $53 million into Twin Health underscore continued appetite for software, AI-driven solutions, and healthcare innovation. And last but not least, number four, manager searches are tightening competition. Oklahoma Police Pension's narrowed equity manager search highlights that even modest mandates are competitive and can represent meaningful substantive entry points for GPs seeking sticky, long-term relationships with public plans. So what's the bottom line here? Fundraising momentum is holding steady across RIAs, institutional LPs, and venture growth rounds, with capital gravitating towards scalable platforms, healthcare innovation, and proven private equity managers. Both GPs and LPs should position around focus, scale, and differentiated expertise as the key drivers of deal flow are this in the current market.
Absolutely. And on the LP front, I just want to note it. One other search that we actually just had come across our booth here, a core fixed income search from Concord Retirement System up in Boston. They use Fiducian advisors from a consulting standpoint. They are seeking proposals from qualified managers to provide core fixed income investment management services for the retirement system's $246 million investment portfolio. So the board is expecting to allocate $45 to $55 million to this mandate. So U.S. fixed income, core fixed income, deadline of September 23rd. Flag it. Sorry, I cut you off there. I just want to make sure we got that in, but always appreciate the what does this all mean, diving into that, especially summarizing, right? What are those key takeaways across GPs, LPs? Things are changing every single day. And thank you to everyone out there for tuning in. This is another great fundraising news podcast episode, and looks like a fun fact that you may want to call out here.
Of course. So I'm not just a big R&B and hip hop fan, but one thing I wanted to point out was on the culture and real asset side. The Weeknd is reportedly working with Lyric Capital on a $1 billion music rights financing that could rank among the largest of its kind. And thank you guys for coming out. Make sure to get some flip-flops and your surfboards out for this weekend, and we'll see you next week. Thanks.
Yep, Lyric Capital, the name fits. Thank you. See ya.
This episode is brought to you by Dakota Marketplace, Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.